Hey, what's up guys? It's Josh here with the School of Hard Knocks. Hope you guys are having a great day. Today we're talking all about credit and how to improve your credit score, because whether you like it or not, credit is something that affects your life every single day. Whether if it's something you want to apply for a car loan, or if you want to apply to buy a house, or if you want to apply to rent an apartment, they will check on your credit. And the reason being is because that's going to show overall how responsible you are with managing your money. So we're going to be talking all about that today, understanding credit and ways to improve your credit. And if you guys do enjoy, if you guys get value from this video, would really appreciate if you guys could please leave a like and subscribe. Would really appreciate it. Without further ado, let's go ahead and hop into it. What exactly is your credit score and what does it mean? Your credit score is really just a numerical value that represents how likely you are to pay back the lender on time on their borrowed money. So that FICO credit score range is anywhere from 300 to 850 being a perfect credit score. So depending on where you are on that range will be the determining factor of if you get a great interest rate or a bad interest rate on your purchases or loans. Now that we understand what credit is, what are some of the main factors that actually affect your credit score? We're going to be primarily talking about the FICO credit score, and the reason being is because that's what 90% of lenders use to go ahead and determine your credit worthiness. So there's 5 main components that make up your credit score or your FICO credit score. The first component is your payment history. This makes up about 35% of your credit score. And this really just pertains to your payment history. Are you paying your credit card off in time? Are you giving them the payments that they want? And if you have had some slip ups in the past or some delinquencies in your account, as long as you start making good payments now and in the future, those delinquencies of the past will affect your credit score less, as long as you show improvement in your habits ongoing. The second component is credit card utilization. This makes up about 30% of your credit card, and really what this is pertaining to is your lender wants you to use less than 30% of your credit limit. And the reason being is because they just don't want you to see that you're too overextended. So there's 2 good ways that you can go ahead and improve this. The first one is honestly just paying off your balances at the end of every month or by the next billing period. And the second one is you can actually contact your bank and ask for a credit limit increase. So that way, your credit limit goes up and what you have utilized right now becomes less than 30%. So you can get approved by that, but you don't want to increase. Just because you got the credit limit increase does not mean you want to increase your spending just because you got that. It's really just to improve your credit card utilization. The third component is age of credit. This makes up about 15% of your credit score. And just like in real life, as you get older, the more mature you become. And that's kind of how lenders view credit cards. The longer you've had access to credit, the more responsible you tend to be. So something that you can consider when it comes to age of credit is that if you do have multiple credit accounts open and maybe one of them isn't in good balance, don't close out the other credit card. And the reason being is because that will lower your overall available credit, which could lower your credit score. So what I would do is, in most cases, is typically deal with the delinquencies first before you close out the other credit cards. So that way it does not lower your credit score. But honestly, I would do some personal research on this, on your personal situation, and see what's the best alternative for you. The fourth component is new credit inquiries. This makes up about 10% of your credit score, and there's 2 types of inquiries out there. There's a soft inquiry and there's a hard inquiry. A soft inquiry is if you're checking your personal credit score, or if there's a financial institution that you're already doing business with, if they check your credit score, that is soft. A hard inquiry is if you're applying for new credit cards, or if you're applying for some sort of loan, whether if it's an auto loan or a loan for a mortgage. Either of those, and if you do a lot of those in a short period of time, it is bad for your credit score. And the reason being is because banks will be like, okay, he's probably going through some sort of financial difficulty, therefore you are a bigger risk to them, therefore lowering your credit score. The fifth and final component is your credit mix. This makes up about 10% of your credit score, and this is really just talking about how you're able to handle different types of credit, whether it's for an automobile loan, a home loan, or a student loan, or just credit cards in general, how you're able to handle those things and how you're able to pay them off. And something that I could encourage you to do is don't take loans out that you don't need, because that could have an effect on your credit score. The credit mix is honestly quite complicated, so before you take out a new loan, I would do some personal research onto how that may affect your personal credit score and the best ways and the best alternatives that you can do to go ahead and keep your account in good standing. Overall, the simplest way to improve your credit score is to just avoid late payments at all costs. I personally have my checking account set up so that every single month I have an allotted amount of money transferred over to my credit card, paying it off. Something that you could consider is putting your monthly bills on your credit card, and that way it would not only simplify your billing, but it ensures that you'll pay it off and therefore improving your credit score over time. Thanks so much for stopping by. I hope you guys enjoyed today's lesson on understanding credit and how to improve your credit. We're going to be coming out with so much more educational content on financial literacy and just business in general. So if you guys do enjoy the type of content, please leave us a like and subscribe. I'll catch you guys in the next one.